Under the direction of Vicki Stern, the Barclays team covering leisure and hotels claims first place for the first time. Demand is rising for both business and leisure travel, but not all companies in the hospitality industry will benefit equally. Stern highlights which ones are best positioned to outperform in 2014.
So we are really positive on the hotel outlook in 2014. I wouldn't say that's the case for every geography. I think one thing that's been so interesting about this cycle is you've had a real discrepancy between US recovery, European recovery, and even within Europe. Obviously, every market's been so different. So that plays quite a lot into our stock recommendations. For example, Whitbread, we're extremely positive on. We think you've got probably 23% upside to that last peak RevPAR in real terms. Compare that with the US, 7% upside, just not as exciting. So that kind of feeds into what we're positive on. Broadly, European hotels, very much so, a little bit less so for the US guys. So we're neutral on the travel sector. That doesn't mean we're negative. Actually, within that, it's basically the average of a very positive view on TUI travel and a slightly more cautious view on Thomas Cook. That positive view on TUI travel is actually one of our top picks in the sector. Why that? It's a company where we're about 7% ahead of consensus when you look out to next year. It's a company that's probably got 7 to 10% EBIT CAGR, but I think nobody really wants to believe it because this is just a sector that's had a few issues in recent years, and people just are less easy to subscribe to the view that this is something that can deliver, double-digit earnings growth. We think they can. We think there are a lot of really good drivers behind that. They're also going to be helped out by the cycle, and that's also quite a key positive. And bottom line, there's not much that's cheap out there, and these stocks are still incredibly cheap with nice earnings CAGR. We are pretty bearish on gaming companies right now. Again, this is a sector where there are so many things going on. Regulation is so important. We turn more cautious, particularly for the retail operators, so Ladbrokes and William Hill, very recently. This was partly on the back of the fact that the UK government, or at least the Labour Party, seemed to be making a massive fuss about regulation in the sector, particularly around having these machines, so FOBTs, in the shops. Why that's an issue, even if Labour don't get in, certainly Cameron hasn't responded with a vehement disagreement of that view, and actually there does seem to be a little bit more of an acceptance that there is a bit of problem gambling. That's a massive issue for this sector. So, I mean, ballpark, this is 30% of the group's earnings, a little bit more so for Ladbrokes, a little bit less so for William Hill. But this regulatory threat for us is really significant, and at the very least, we think it's just going to hang over the sector for many months and even for the next couple of years. So there are quite a few other stocks that we're pretty positive on actually in the sector. Merlin, this is our new company. This was an IPO at the end of last year. It's theme parks and it's all exciting around Legoland and Madame Tussauds. It's a great company, and this is absolutely one of our key ideas for the year. I think the company's understood, people get the business, but in terms of the huge number of opportunities this company has from an earnings accretion standpoint, and this is coming from Legoland, additional parks, this is coming from Midway, which is where they have the Madame Tussauds, Sea Life, these sorts of brands. It's a management team that hugely impresses us, and we will be staggered if sort of the base case of forecast is actually where we end up at the end of the year. So it's not a screamingly cheap stock, but super high value, top management team, and a really fantastic equity story. So I think that's one of the ones we'd highlight.